Everyone celebrates NVIDIA, but almost nobody is asking who actually makes NVIDIA possible. The entire market is just fixated on the engine of this AI revolution, but they're completely ignoring the high-octane fuel that actually allows that engine to run. So today, we're putting SK Hynix on the stand. Section 1. The Invisible AI Engine, or the True Bottleneck. To really grasp the massive opportunity here, we first have to understand what is actually throttling AI right now. It is not just the processing chips, it's the specialized memory that fuels those processors. We're talking about HBM, high bandwidth memory. Now, this isn't your standard laptop memory. It's a highly advanced, vertically stacked memory architecture, and it is basically the absolute lifeline for AI supercomputers. Literally, without HBM, NVIDIA's GPUs just cannot function at full power. They'd be completely starved of data. To picture the technological leap we're dealing with here, think of standard DRAM as a narrow one-lane road, or maybe a single bookshelf. HBM, on the other hand, is a massive 16-lane highway stacked 12 to 16 stories high into the sky, complete with express elevators. Actually, to build a skyscraper like that requires such extreme engineering precision that only 3 companies in the whole world can even do it. And as you're about to see, one company is absolutely dominating the construction site. Section 2. Breaking the memory myth, going beyond the boom and bust. So if HBM is so incredibly crucial, why on earth is the broader market entirely missing it? Well, Wall Street is stuck looking in the rearview mirror. They're incorrectly viewing SK Hynix as the cyclical, boom-and-bust commodity memory company. They're punishing it with the historical Korean discount, that tendency to undervalue South Korean stocks because of geopolitical or corporate governance fears. They're terrified memory prices will crash like they have in the past, but they're completely missing the fact that HBM is fundamentally different. It's not sold on volatile spot markets. SK Hynix is locking down multi-year contracts with fixed prices. The whole business model has completely transformed from a commodity into elite, locked-in infrastructure. Section 3. The HBM monopoly and their unmatched dominance. All right, we've laid out the myth. Now let's look at the undeniable evidence of their dominance. SK Hynix has just completely outmaneuvered the tech giants. Look at these 2026 projections. SK Hynix is sitting on 50 to 62% of the overall HBM market. Samsung is trailing way behind at 25 to 40%, and Micron is left fighting for scraps with just 5 to 20%. You see, SK Hynix had a massive 10-year head start. They started developing HBM way back in 2013, and this just proves they have absolutely no intention of relinquishing that lead. And here is the most crucial piece of the puzzle: their symbiotic, basically irreplaceable relationship with NVIDIA. For NVIDIA's massive upcoming Vera Rubin AI supercomputer, SK Hynix is firmly locked in as the primary supplier. We're talking about a massive 60 to 70% share of the HBM4 allocations. And it's not just that one supercomputer. They're the memory partner across NVIDIA's entire roadmap straight through to 2030, covering the Vera CPU, RTX Spark, and Jetson Thor. They literally co-develop directly alongside NVIDIA. But wait, it gets even better. Because even if Samsung or Micron magically designs a flawless chip tomorrow, it wouldn't actually matter. Why? Because SK Hynix has already gone ahead and secured 60% of TSMC's advanced packaging capacity. Advanced packaging is the physical bottleneck in producing HBM. So SK Hynix doesn't just have the best tech, they literally own the manufacturing choke point. And listen, this isn't just some little side project for them anymore. By 2026, HBM is projected to make up 60% of SK Hynix's total DRAM revenue. It's rapidly shifted from this niche product into their absolute primary profit engine. I mean, they sold out their entire 2026 lineup before the year even started. Section 4. Financial power and unprecedented growth. So let's look at the financials and see how a technological monopoly actually translates to the bottom line. Spoiler alert, it translates into some of the most aggressive profit metrics in corporate history. Just let this number sink in for a second. 198% year-over-year revenue growth in Q1 2026. Revenues basically tripling in 12 months. And this is coming from a company that was bleeding billions back in 2023. It is, without a doubt, one of the most dramatic corporate turnarounds on record. And they're not just bringing in revenue, they are absolutely printing cash. We're talking a 71.5% operating margin. Let me just emphasize that aggressively. That 71.5% actually beats NVIDIA's operating margin of 65.6%. That officially makes SK Hynix the most profitable semiconductor manufacturer on Earth right now.
And all of that filters perfectly down to the absolute bottom line, a 77% net profit margin. Retaining over 3/4 of your revenue as pure net profit proves one thing beyond a shadow of a doubt. SK Hynix possesses absolute, unbridled pricing power. When Jensen Huang is publicly pleading with you to make more chips, well, you name your price.
This massive cash generation has built them a fortress-like balance sheet. Their return on equity is an incredible 61.2%, which just showcases extreme capital efficiency. They're sitting on this massive war chest with a cash position of 54.4 trillion Korean won that completely eclipses their total debt of 21.8 trillion. In just 2 years, they went from being highly leveraged to holding a massive net cash advantage. Section 5. The valuation disconnect and the massive mismatch.
We've seen the crime of the market's misjudgment. Now let's look at the absolute absurdity of their current valuation. Consider the cognitive dissonance here. You have an elite AI monopoly, right? Growing revenue at nearly 200%, pulling in the highest margins in the entire industry. And yet, it's trading at an insultingly cheap forward PE of 4.06. A 4.06 forward PE. Its PEG ratio is a microscopic 0.44. EV to EBITDA is sitting at 11.3. When you compare that to NVIDIA's forward PE of over 16 or Micron's 9 to 11, SK Hynix is trading at a deep, deep discount. It is a severe market inefficiency.
Section 6. The final verdict and analyzing the risks. Of course, any good analysis has to be completely objective, which means we need to detail exactly what conditions would invalidate our thesis here. So let's look at the risks. These are your thesis breakers, the exact metrics you need to watch. Number 1, if SK Hynix's HBM market share drops below 40% for 2 consecutive quarters. Number 2, if Samsung somehow manages to overtake their 2 to 3 year technology lead. 3, if the forward PE exceeds 10, which would indicate the valuation has normalized. Or finally, on a macro level, if overall AI infrastructure demand slows down, which would drag HBM pricing right down with it. Those are your clear exit signals. But until those breakers hit, the evidence is pointing in one very clear direction. SK Hynix is literally the oil refinery of the AI revolution. And right now, it is trading for pennies on the dollar. So I'll leave you with this. Will you capitalize on the true foundational engine of the AI boom before the market finally corrects this massive mispricing? The data is all right there. Thank you so much for joining me on this explainer. Keep learning, and I'll catch you next time.